Good evening, traders. This will be a quick market review video for the dollar index and some other assets. In front of us, we have the dollar index, daily time frame. We've seen a decline from the highs of October, and we are currently trading in the middle of the range. Recently, we've seen sell side getting tagged with a low. Now we are somewhat in the middle of the trading range at equilibrium. And where we are trading at for the dollar index right now, it's difficult to give a direction that it should be reaching for, and if you factor in some other happenings around the world that are affecting the currency markets and the intermarket relationship between the dollar index and the gold market, you'll see that there's a lot of things that's not supporting low risk movement in the marketplace right now. So the market is in a holding pattern. We are trading inside this fair value gap around the monthly opening. We have buy side above 106,800 and sell side at 105,400. Now, does it want to go up and take out the buy side, then probably continue into the highs of October? I don't know about that yet. We are going to have to see what it does going into Tuesday. So we are going to leave out Monday's trading. We aren't touching that, and we'll see what develops going into Tuesday New York session. Should we lose the low of this fair value gap, then I'll be watching this right here. I don't personally think it's going to get all the way down here to 104,500. That's only gonna be on the heels of maybe some devastating news or economic data. So sell side below here is what I'm watching. Should we lose this fair value gap, and should we use it as support, then I'm watching this buy side liquidity at 106,800. And we also notice that we are also trading at the consequent encroachment of this daily candle. We are respecting that. I don't know where it's going to go. I can frame it on the buy side and on the sell side, so it's low probability right now. British pound, US dollar, similar stuff with the dollar index. Of the consequent encroachment of this candle here, we are hopping off that. We have cleared the lows, sell side, the bodies of these candles of sell side, and the bodies of these relatively equal candles. We have buy side above the previous week high, and we have a fair value gap there. So we'll be watching this to see how it trades this week. British pound, US dollar 1 hour chart. So that's the sell side liquidity pool, relatively equal lows. Run on sell side. Multiple attempts to go higher, but they are keeping these highs intact. There will be lots of buyers pulling around this level. So I'm watching that going into the new week. Euro dollar daily time frame. This is a weekly fair value gap. Seeing a drop from it, then another rally back into it. The market is in a holding pattern as well. Same thing with the dollar index. We'll have to be watching these highs. If this high doesn't give way, then previous week Thursday's lows should be the target. Now it's not 100% ironclad. It has to go to these price levels. Remember what I said about the dollar index being low probability right now. We'll have to see how it trades going into Tuesday. But if you want something clear, straight to the point, I don't think this market is a market that you should be having a bias for. I think this market is in my opinion, this market is in a scalping mode. Day trades, not really sure about that. I think it's basically gonna be scalping. It's a scalper's market. Get in, get out, take a little piece for the day and get out. You don't want to overstay your welcome in this kind of market conditions. Euro dollar 1 hour chart. That's a CB on a 60-minute chart. Rejection block. We've respected that. Came back into this fair value gap for UFED. Going back into the CB on the weekly time frame. And closing that inside that daily fair value gap on daily time frame. You can see that fair value gap. Now, watching this going into this new week, if the market is going to use it as an inversion fair value gap, it's a bearish fair value gap. If it should be used as an inversion fair value gap, it means the market will use it to go higher, or it could use it as support and resistance to sell prices below this relatively equal lows for sell side, and then these lows from the previous week. That's possible. Anything is possible going into this new week, so we don't have any bias going into the new week. Even the S&P, we've seen large down close candles into the bodies of these candles. The liquidity rests below the bodies. This low, I think it's gonna get tagged definitely this week. Then how we trade below these lows remains to be seen. But for the shorter term, I think we are going to these relatively equal lows. They are way too smooth for 186. Even sell side liquidity on ES, I'm expecting that. If you also look up here, we have some form of fair value gap. Would that be offered? I don't really think so. I prefer to see that stay open. Yeah, maybe we run below these lows with 1 day, 2 days, and then we start reaching up back in there. Or better still, we don't even feel that, we just keep going lower, cascade lower down into sell side liquidity. I prefer that. Then we can look to this being filled at a later time. That will be all for now. I will update in a video, maybe Monday Asian session. Depends on what the market prints. That will be all for now. Good luck and good trading.